Dear students, today we will discuss about death of a partner. Okay. These days we have been discussing about various cases of reconstitution. In reconstitution, we have already studied change in the ratio through mutual consent among the partners, admission of a partner, retirement of a partner, and now we are going to see death of a partner. See here, this topic has become very simple because no comprehensive question is going to be asked because no need to prepare deceased partners capital account. So in this way, CBSE has made our work or your work rather little easier. Okay, so here we are going to see basically the concept of death in the partnership. So dear students, this death is also an example of reconstitution of partnership, which we have already seen different cases of reconstitution. Okay, starting from change in ratio, admission, retirement, these are all examples of reconstitution. So when reconstitution happens, the partnership agreement is temporarily comes to an end, and they will close the accounts also temporarily, and a new partnership agreement will come into the picture, right? So we have seen retirement. In the case of retirement, one partner is going away and his total entitlements will be given to him by the other partners. So here in the case of death also, basically it is more or less the same. One partner is dead, so he is after all going away, and the partnership accounts has to be temporarily closed and a new partnership has to be uh, formed, or at least a new partnership agreement has to be formed if the other partners decides to continue the business. Okay, so this is also a simple case of reconstitution. The existing partnership will come to an end. Now if you see the difference between the basic difference between death and retirement, you can see one major difference here, that you can see it here on the board, that retirement is of course planned. The existing partners, they can plan one partner's retirement. So when they plan this retirement, normally it happens at the end of an accounting period for convenience, so that they can close the books very easily, and they can also calculate the total amount due to the retiring partner very easily. But in case of death, what happens? It happens all of a sudden. It is not planned. So it can happen on any day during a year. Okay. So during the 12 months period, it can happen on any day. It can happen immediately after that. It can come after 1 month or 2 months or 6 months or 10 months, etc. Okay. So when death happens, it is more or less the same thing. They have to close down the accounts, and the entitlement of the deceased partner. So we call the partner who is dead as a deceased partner, and his capital account will be prepared. Okay, so in this case, in most of the cases, they will be preparing the deceased partner's capital account, and the entitlement of the deceased partner's capital account will be transferred to his executor's account. Okay, partner. So we will work out the total entitlement, how much total money is due to the deceased partner, the partner who is dead. So we will work out that amount, and that total amount will go to the executor's partner. He will be settling all the accounts of the deceased partner with the partnership business. Okay, so the total entitlement due to the deceased partner will be going to, it will be transferred to the executor's account. So he will be the person in charge of that process. In case of deceased partners account, the balance will be transferred to the executor's account, which can be paid immediately, or it will be taken as a loan, or which can be paid in installments. Okay, so basically the uh, settlement procedure is more or less same of death and retirement. The main difference between this death and retirement is that in most of the cases only the deceased partner's capital account will be prepared, and this death, since it happens during the year, in the middle of an year, then we have to make some more calculations, some more adjustments. Let us see what are they. Now if we see the total entitlement, total money due to the deceased partner, we can see what he will be getting. Of course, he will be getting the capital balance, the amount which is there in his capital account at the date of death, on the date of death, and he will be getting the part of his share of general reserve if there is any, and of course he will be getting his share of goodwill. So total goodwill has to be calculated. In most of the cases it will be given in the question, and we will have to find out the retiring partner. In this case, you can see I have given an example of A, B, C uh, running the partnership business, and C is dead and his share is 1 by 5. Here the ratio is 2 is to 2 is to 1, the existing ratio. So C gets 1 by 5. You can see C's share, right? So here also the goodwill treatment is same. Like, we find out the total goodwill, we take the total goodwill, then we calculate this deceased partner's share, then that share will be contributed by the remaining partners, or rather the gaining partners, depending on different situation. An example, you can see the goodwill is estimated as, let us say, 50,000 rupees in this example, and the deceased partner share is 1 by 5. So if you work it out, it will be 10,000 rupees. 10,000 rupees is the deceased partner's share of goodwill. So this 10,000 rupees will be further divided among A and B. If there is no other information, then their gaining ratio, it will be equal 2 is to 2. That means 1 is to 1. So equally this 10,000 will be distributed among A and B. That means A and B has to compensate, or they have to give this much money. That means 5,000, 5,000. Okay, you can see this 10,000, the share of deceased partner's goodwill will be borne by the gaining partners A and B in this case. So they will be dividing this amount 5,000, 5,000. So A should bring 5,000, B should bring 5,000. So this 5,000 and 5,000, it will be coming as a deduction from the capital account, and C will be getting 10,000 rupees, 5,000 rupees, 5,000 rupees, 5,000 from A, 5,000 from B, total 10,000 rupees. It will go to C's capital account, the deceased partner's share. Okay, so that is the accounting treatment of goodwill. So here also the procedure is more or less same, and now another important calculation to be made is the calculation of interest on capital. You just to find out when the deceased partner died. Okay, suppose the deceased partner, okay, you can see if the deceased partner died on June 30, after closing the accounts on March 31st. He was there very much part of the business, that is in the month of April, May, June, 3 months he worked in the partnership business for 3 months. So for 3 months he has to be given his share of interest on capital. He has to be given interest on capital for 3 months. Okay, so when calculating interest on capital also, you just take the capital, the amount into the percentage. If it is, let us say, 10% as per the date, you take it as 10% into 3 months only he worked. So it should be 3 by 12, 1 by 4, dear students. So you calculate the amount in this way: capital into rate into period. So only 3 months interest only he will be getting. He'll be getting only 3 months interest on capital, because after 3 months he died. Okay, so his entitlement will be for 3 months. So in this way, interest on capital you can calculate. Interest on drawings also, if it is given, you can calculate in the similar way. And of course, interest on drawings will be coming in the debit side of the capital account, and you don't have to prepare this capital account this year. From the CBSE syllabus, that particular portion is deleted, so no need to prepare the capital account. So there may be questions, or small questions, short questions rather, of this numerical type. So you'll have to calculate those amount. So here we have given, so this will be the entitlement. So I am just repeating. He will be getting the capital balance, he will be getting general reserve share, then he will be getting his share of goodwill. Goodwill will be adjusted, of course, through the other partner's capital accounts. Then interest on capital he will be getting for the period he worked. Here it is 3 months, and the interest on drawings also he has to give. It will be coming in the debit side. Then he has to get the salary. He has to be given. He has to be given the salary. Here the salary also, it will be, if it is given monthly, it will be multiplied with 3 for 3 months. Okay, if monthly salary is given, you multiply, and yearly salary is given, you will have to do it accordingly. You calculate, you convert it for only 3 months. So it should be 3 by 12 if the yearly amount is given. Fine. Okay, now the most important adjustment here, he should be given a corresponding profit for the corresponding period he worked. That means for 3 months. The 3 months the business was going on, so for 3 months the profit has to be calculated, and that profit has to be given to the deceased partner. And how much is the profit? Normally it won't be given directly in the question, because the partners were not in a position to calculate the profit. It is not the end of the accounting period, only 3 months passed, so they may follow a different method. Okay, in order to calculate the profit of the corresponding period, we will use different methods. Of course, the partners may use different methods. One such method is that they will consider the sales of that particular period, and they will calculate the profit based on the profit percentage, the rate of profit. Okay, that means for the period of 3 months, we have to calculate the profit for 3 months period. And if the sales during that period is 1 lakh, you can see the sales, it is 1 lakh. 1L means 1 lakh. So 1 lakh, and 20% is the profit. Then it will be calculated as 20,000. So 20,000 will be the profit during that period. So this is the total profit of only 3 months. So no need to again convert that into the corresponding period. It is already in that period. So 20,000 into, so this is the total profit, and the deceased partner will be getting his share, that is 1 by 5. So that will be coming as 4,000 rupees, right? So 4,000 will be the profit entitlement for the deceased partner. Okay, this is the first method. Okay, so if in the first method, if the sales is given as yearly, so it can be given as monthly or yearly. So if it is given as yearly, then you'll have to convert first that into monthly. Okay, monthly, then do the calculation accordingly. It depends on the period, it will be different. It may be given monthly, or that for that corresponding period it may be given directly, or it may be given yearly. Okay, so that is the sales method. Understood? Okay. Now there is another method which is followed. See, the partners will consider the previous year's profit or the average profit of the previous years as the what to say the same profit. They will consider the same profit for this year also. So if that is the case, they will see what is the previous year's profit or the average profit of the past few years. Then they will work it out accordingly. Suppose if the previous year's profit or the average profit of the last few years is, let us say, if it is 50,000, then what they will do, this is last year's profit or the average profit, whatever is the case, depending on the question. They will convert that into his share. Of course, his deceased partner share is 1 by 5, and remember this is for one full year. Okay, see, yearly it is given one full year, so his share, then you convert that into 3 months. That means 3 by 12 or 1 by 4. Okay, convert it this way. Understood? So this is another method. So I hope you understood this method. You simply take the profit, average profit or previous year's profit, then convert that into the corresponding period. If it is 3 months, then it should be 3 by 12 or 1 by 4 into the deceased partner's share. So you calculate the amount. So that will be the profit entitlement for the the deceased partner. Okay, that will be the entitlement of the deceased partner. So in this case, it will be worked as, let us say, 2,500, right? So this amount will go to the deceased partner's capital account. Okay. Now, another important thing is that when we write this in the capital account, the the entry will be profit and loss suspense account or adjustment account. Profit and loss suspense account. Okay, why it is known as profit and loss suspense account? Because the profit is because this is not the final profit. Okay, we don't know what will be the profit, so we put it in. This is not the real profit, so we put it in profit and loss suspense account or profit and loss adjustment account. And later when we prepare the final accounts and find out the correct profit, work out the correct profit, then that profit will be adjusted with this profit and loss suspense account, or this particular amount will be adjusted with the real profit, dear students. So this will be the entry which will be written in the partner's capital accounts. It will be by profit and loss suspense account, dear students. Okay, so these are the different adjustments to be made in deceased partner's capital account. These are the entitlements which are payable to the deceased partner. Of course, it will be payable to the executor's account. So the amount will be worked out and it will be total, and the balance will be transferred to the deceased partner's executor's account. So dear students, this will be the accounting treatment of the deceased partner's capital account. I hope you understood all the adjustments. Okay. So instead of getting a comprehensive question where you need to make all the capital accounts of the partners or the deceased partners capital account, you will be asked most probably short numerical calculations. It may be of interest on capital calculation, or maybe salary, or maybe to calculate profit for the period, or maybe just to calculate the total entitlement payable to the deceased partner without, of course, preparing the capital account. Okay, right. So this is the end of today's topic. In the next class, we will pick up another topic and study.